Well, hello everybody, this is Price Headley. Here we are on the week of July the 20th, 2009, and excited about the volatility we've seen in the last couple of weeks especially. You've seen a big snapback bounce in the Dow, the S&P, and the NASDAQ, and now it's really crunch time because we're heading right back into prior resistance levels. You can see we were up to as high in the Dow as about 89, or the equivalent of 8,900. The DIA, of course, trades 1/100th the value of the Dow Jones Industrial Average, give or take. So here we are as we sit right back up to about 87.88, and so we're right back into that resistance. You can see the percent R just now going into the overbought status here, and so it's really crunch time here. This is when it goes overbought like this on percent R, you can see the efficiency ratio also creeping back up into the positive, but not quite into the super strong category yet. But bottom line is that it's really needs to get some more upside follow through this resistance, or else we're going to run into some profit taking. And if we do, we could see a pullback back to probably the old secondary resistance, which is right near 86. So it wouldn't surprise me if we saw that, given that we've seen some relatively low VIX readings on the volatility index. We'll look at that. And then also the put call ratios are also showing a lot of calls being picked up here late this past week on last week's July expiration trading. So that's the Dow. As we look also at the SPY and the QQQQ, here's the SPY, and you can see SPY is even a little bit weaker. We're right back into the upper acceleration band here, just near the 95 area. In fact, that's the high so far today within the first hour trading here Monday morning. And again, I would expect to see a little bit of a cool off because they're just now going overbought on SPY on the percent R readings, and so that's telling us it probably due for a little bit of a rest here right into the upper band resistance. At the same time, not getting mega bearish either, expecting that the summer season will see some more choppiness. This week marks a vast majority of the earnings reports coming out, including stocks like Apple due tomorrow, so we'll be watching that very, very closely. Let's look at the Q, speaking of Apple and other NASDAQ oriented names. As we pop up the NASDAQ 100 QQQQ chart, it has been the relative leader. You can see that certainly we've broken above the recent resistance around 37. Now today we're seeing actually a second day above the acceleration bands. If we close here above 37.4, that tells you that the NASDAQ is leading, and in fact it is bull confirmed on percent R. We've gone overbought and kept on going up. So if you're going to be looking on the bull side, you want to be focused on buying the NASDAQ oriented names into the short-term dips. Usually when percent R gets this extended, we hit 99.6, it can only go up to 100, so it's usually due for a little bit of a retest at some point, but that's a very strong pattern comparatively, and that tells us that the relative leadership is still in the NASDAQ. So you want to keep your attention focused on NASDAQ oriented names. Don't necessarily buy stocks like Apple in front of the earnings, because a lot of times stocks like Apple have had big run-ups in front of earnings, and so you're due for a little bit of a rest. Also, like I mentioned, the VIX is a name that is showing us a relative amount of complacency here, so we're due for a little bit of a pullback just to get a little bit of healthy fear back into the market, and so that's why we're saying be a little bit short-term cautious, but at the same time be looking to buy dips within a short-term evolving uptrend, especially in the NASDAQ compared to the Dow and the S&P that don't look as strong. So watch for a dip at some point this week and be ready to jump on it for probably another push higher into August after a little bit of a short-term dip. That's what we're expecting at Big Trends. Hope you have a super week ahead and look forward to seeing you back again early next week.